Hey everybody, what's up? It is Thursday, May 21st. How's everybody doing? I hope everybody is safe and well. Well, we had a little pullback in the market today. And as you know, I don't know if I mentioned this, but I have been sending it out. We see now the put-call ratio has fallen down to the lowest level since about mid-February, early March. So all of the extreme bearish sentiment, at least as it is depicted in that ratio, has been washed out as a result of this rally. So we could probably expect some kind of a short-term pullback. However, some of the longer-term indicators, sentiment indicators like American Association of Individual Investors, that weekly survey that they have, I looked at it again today, and by the way, I always send out a full breakdown and analysis of that thing every week to my subscribers. That thing is still showing, believe it or not, a very high level of bearish sentiment on the part of individual investors. I'm sorry, did I say high level? A very low level of bullish sentiment, right, a very high level of bearish sentiment, and neutrals below average. So when you look at that thing, and that thing was a very good indicator last year in 2019. Those of you who followed me back then, you know that I kept pointing to the high level of neutrals, people who were uncommitted. And the market kept going up last year. I mean, we had those corrections, but every time we had those corrections, I was saying, look, the fundamentals are bullish. You have to buy into those corrections. But what was interesting last year was that there was a really high number of neutrals. That means people, they're kind of sitting on the fence, and they all jumped off the fence in January of this year at the top of the market. Now we have a situation where individual investors are very negative on the market. So to me, it suggests we're going to see higher stock averages, but in the short term, we could have some pullbacks like this put-call ratio is indicating. Now that's all technical stuff. You know I like to focus on the fundamental, the fiscal, all the MMT stuff. So let me give you an update on that. As you know, fiscal is, I mean, it's enormous, it's unprecedented. We're up 890 billion in spending over where we were at this time last year. And again, last year was a record. So we're up almost $1 trillion. Pretty soon we'll be up $1 trillion over where we were last year. That's an unprecedented increase where spending is growing at about 30% year over year. I mean, we've never seen anything like that. You have to probably go back to 1941 during World War II to see anything equivalent to that. I'm looking at the tax flows. I talked about this, and I have been talking about this, because the tax flows are an indication to me as to whether or not we're seeing some pickup in the economy. And the other day, as a matter of fact, I did a video. I said the evidence is starting to come in. We saw a pickup in employment and withholding taxes. That could be an indication, now that the lockdowns are over, people starting to go back to work. So if you look at the period from March 16th, basically around the time where we first started to get these lockdowns nationally, March 16th through May 14th, we were seeing an increase of about the average daily employment tax increase was 9 billion, not increase, but the average daily employment and withholding tax deposit, was up by 9 billion per day. But from May 15th until now, not many days, 4 or 5 days, May 15th until now, the average has gone up to 11.2 billion a day. So that's significant. That's a 24% increase in those employment tax deposits. So that's an indicator. To me, I see that as an indicator that, or at least it corroborates what we're starting to see anecdotally, which is, a lot of the country's starting to open back up slowly, but it's better than keeping everybody under lockdown. As a matter of fact, if you can, go check out the front page cover of today's New York Post. You could Google that online. New York Post is the local New York City tabloid. And it was like, time to open up. Enough already. Like, people are really fed up here. Said, hey, look, we did everything you asked us to do. We did social distancing. We're all walking around with masks on. We were locked down for 2 months. You said we were going to need 40,000 ventilators here. They didn't come anywhere near that. You said we're going to need extra hospital beds. They set up a whole convention center here in New York City as a hospital. It was never used. They got that Navy ship, that hospital ship, the Mercy here. That was never used. They sent it away. The hospitals are not full. So people are getting fed up. They're like, enough already. We don't need the lockdown. As a matter of fact, Governor Cuomo here, New York governor, when originally he said May 15th, we're going to start opening up, he pushed it back. Actually, it's the city. About half the state is starting. To be fair, about half the state, I think 5 of the 10 regions of the state are partially reopening. But the city is locked down. But people are getting fed up. I mean, check it out on the front page of the New York Post. I thought it was, and the guy, there was a column written by the guy, and he pointed it out. I mean, I think he really summed up how everybody feels about this. One more thing I want to mention is the Fed's Forex swap lines. Those swap lines, the week before last, we saw a decrease, but this past week, and that's the week ending yesterday, Wednesday, May 20th, we saw an increase of $5 billion, bringing the swap lines to $446 billion. That is the highest, at least open amount that we have seen since they started really engaging big time in these swap lines. So, I mean, that dollar shortage, I guess it's still there because these central banks, these foreign central banks, still coming to the Fed for that dollar liquidity. I was, last week I said, hey, look, we had a contraction in those swap lines. Some of them were closed out. The outstanding amount came down. I thought maybe that was a good indication that we had, the pressure was off, so to speak, but they came right back again in this last week and boosted that thing up to a new high. So that's it. I think nothing really changed. Fiscal still very strong. Maybe some overbought short-term condition in the market right now. The gold pullback, that's a buying opportunity. I mean, we've seen commercials come in at these levels now consistently. They're hardly short at all, which is very unusual for commercials. So yeah. That about sums up today. Quiet day. We're coming into a long holiday weekend here in the U.S. But anyway, everyone, remember, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. The subscription rate's going to keep going up. I mean, I have guys signed up when I first started this thing at 75. It went to 75. It went to 100. It went to 125. Went to 145. Went to 195. Went to 250. Went to 395. It's going to go to $1,250 a month, and it's still going to be cheap. So get it while it's $395. At least check it out. 30-day free trial. The link is in the description right here below. All right, everybody. See you tomorrow. Bye.